The head of research at United Capital, Wale Olusi, is live to us from the Nigerian Stock Exchange trading floor. Wale, thank you so much for sticking by and being my guests on the show today from the beginning, the first working and business day in the new year 2020. Great. Okay, so the concluding part of your investment bank's economic outlook report for 2020 spoke to the stock market, and you said your best case scenario for the Nigerian stock market to be a positive 5.3% reading for 2020. That's not enough to write off the negative 15% of 2019 and about 17% negative reading of 2018. So give us your view on the equity side.
Okay, again, Boston, like I mentioned earlier when we spoke in your first segment, the biggest concern for us as far as the equities market is concerned is the fact that FPIs are not looking at equities at the moment. They have concerns around some of the policies around exchange rates and the fact that they can get, money market instrument at double digits, which is very comfortable for them, and the risk is almost zero apart from FX. So if you now look at the fact that domestics can, buy some of these stocks who have high dividend yields, and the fact that there's a lot of liquidity in the system, hopefully that might push the market up about 5%. Because what we've seen over the years is that the FPIs are actually the biggest drivers of performance in the Nigerian equities market, and we saw that in 2017 after the I&E window was opened. Again, on a technical basis, we realize that a bearish note, the market can actually go lower, about 10% or 16% negative, if things go from where they are now to really bad. But it can improve if some of the concerns are adjusted, and it can go as high as 23-25%. If some of these things are adjusted. The key concern, again, are the fact that FPIs are not looking at equities at the moment. Some of the policies may affect the tier 1 banks, especially because some of the policies that we have seen around, non-interest income, as well as the fact that the CBN wants the banks to lend a lot, may affect the performance of some of these listed stocks in 2020. So those are the key issues that is keeping our outlook very, very modest at about 5%.
There's so much liquidity in the system, Wale. So it's very amazing that there's huge liquidity, almost $1 trillion on the last day of 2019 from the central bank. So why is this money finding it very difficult to get into the stock market for a big jump, considering even if these go into the dividend-paying, very good companies with dividend payouts and dividend yield companies and all of that? What is the key issue here for both local and foreign investors? Even as yield continue to go towards single digits at the fixed end of the market, yet the money is not flowing into the stock market. What's the message here?
I think that's a great question, Borsin. I think it's a great question. Now, let me talk to the first point you mentioned. The first question you mentioned about liquidity of about $1 trillion that came in last week or earlier in the week. What we noticed was the fact that the CBN actually debited the banks. Almost the entire thing was taken out of the system through, the LDR debit. The second reason is that what we also noticed from studies is that, yes, system liquidity have a positive impact on demand for equities, but that only happens if the surge in liquidity is unexpected. Once the surge is expected, it's almost like people start looking at elsewhere. Besides, there are concerns around, the risk in the equities market. So the biggest buyers in the local market, the PFAs, the fund managers, the insurance companies, it looks like they are more comfortable buying zero-risk government instruments, as well as the fact that corporate papers are getting very, very interesting. And I think that's the message. Riskier assets such as, the sub-national bond that the Lagos state government is currently running, a number of commercial papers that are already in the market, and so many of them that will, be out in 2020 are going to be much more attractive than, the sovereign instrument, and we think many of this liquidity will be going into them. The balance perhaps will go into equities if people want to take advantage of the, attractive yield when they declare their dividends.
So, where are the sectors that you're looking at as for high-quality dividend yield paying stocks or sectors in the new year 2020? What's the playbook?
Well, broadly speaking, we are looking at the agri sector, Cresco and Okomo. We think those two stocks are great for 2020, basically because of what is happening around the border and the fact that it will impact on their performance positively. And they do good dividends too. For dividend, high-quality dividend-paying stocks, we think the likes of Tier 1 banks, even though they will be pressured, but if their prices go lower, their dividend yields, become more attractive. The Tier 1 banks specifically, are our top picks for good dividend. Some of the beer companies also pay good dividend, as well as Nestle in the consumer goods space. And then cement, the cement players, the big guys there, the Danksem, the WAPCO, also pay good dividend. We have an old rating on WAPCO, but we think Danksem is very, very good at current price. Plus the corporate action that is currently ongoing, we think it makes them even much more attractive because 1.7 billion unit of shares is a huge demand that might drive up the price.
So you're looking at cement and construction, which was part of the conversation I had in the second part of the program with Adimo Kwesa from Financial Derivatives Company. So if you look at construction and cement, and you look at companies in that space, which of course include Julius Berger, do you see this as attractive for investors, local, foreign, in the new year?
Infrastructure deficit in Nigeria is huge. The president mentioned the fact, I think it was the AFDB president, President Adesina, that was talking about earlier during the festivity, the size of infrastructure deficit across Africa. So cement, definitely, they remain a huge player. Danksem is the beneficiary of the tax credits. They are constructing the Apapa Wharf to Yanowolo, Oloronshoki Express Road. We think that's huge for their, revenue. So definitely, we are looking at them. Their price is also attractive at about 140 to 150. And we think they can go much more higher, even though their full-year performance might, be slightly correct because of the tax credit they got in 2018. So yes, cement in construction, those are good areas for us. Agric is also good, especially Cresco and Okomo. And again, I repeat, the Tier 1 bank they are a decent area to look again for dividend yield.
A final one, quick one from you. The insurance sector regulator, NICOM, has extended recapitalization and new business classification by insurers from June 2020 this year to December. So they've got not 6 months, but 1 year. What's your playbook for insurance stocks? One of the best performers in the market in 2019.
Yes, the insurance sector, one of the best performer, definitely, and that has been driven by the fact that most of them have been trying to gear up their capital base in response to the regulation by NICOM. We think giving them enough time to build up to that is good. It gives the smaller guys that are yet to come out to the market to raise capital to also tidy up that, to get the necessary board approval to go ahead. And it also means that perhaps what we saw happening to them last year might, also repeat itself again, because 1 year gives everybody enough time to either come to the market to raise a right issue or to get your parent company to, fund you more. And, that puts them in a better position, not only as far as market performance is concerned, but gives them a stronger base to be able to insure the economy. Insurance penetration in Nigeria is still very, very low. And one of the ways that we can deepen that is when you increase the capital base for these companies, and they can now take on more risk and sell their services better to Nigeria. I mean, we've seen a number of fire outbreaks. Maybe if some of these businesses are insured, and people begin to see the importance, then we'll see more penetration, and then their stock can even go above the current level.
Wale Lucy, thank you so much, Head of Research at United Capital. A very extensive and comprehensive conversation with you this morning. Thank you so much for raising the curtain on our first Business and Trading Day. Thank you so much for coming on the program, and we thank our viewers here in Nigeria and around the world.
Thank you for having me,
Mofaye, and I will see you again tomorrow here on Business Morning at this time. Have a great day.